Recording right away. So, I hope everyone had a great weekend. Some snow over here. So, I hope you had better weather than we did. Tropical New York City. Good one, David. All right, so let's dive in, right? Uh, let's review the market and then try to formulate a good game plan for the week and especially for the day. So, let's start with equal weight indices and let's start with sharing the screen. And also let's start with just saying that this content is for educational only. This is not financial advices. And basically what I'm talking about each morning in the pre-market session are about my session, my trading, what I see in the market, my game plan, and just trying to share those with you guys. So this is not advices. Just want to reiterate in case it was not fully aware. So let's review the market first. So as usual, what I like to use is QQQE, equal weight NASDAQ 100, right? So we had a bounce attempt on Friday, and we kind of had wild action in the last two trading days. Was it due to Friday's OPEX or not? I don't know. But for me, the structure remains. So one, we're trading below a declining 21 DMA structure. So for me, that's the first sign or clue to just sit out and wait for the market to get better. And we also have a proper structure breakdown. So we had that October 10th low, which was retested on November 7th and kind of traded around mid-November. So we had another retest here, tried to hold, uh, break below. We wedged right into the retest of that structure, right into the 21 DMA structure retest as well. And last Thursday was the rejection, the new low, and just the reconfirmation of the downtrend basically, right? Friday's bounce. And where are we? Still very well below the 21 EMA. We're at 1.5 times ATR. And we are also below that base structure. So unless we reclaim that base structure, unless we reclaim that 21 DMA structure, for me, there's absolutely nothing to do in the market. All we're saying right now, and now I want to show you TradersLab because we'll see it clearly. What I'm seeing right now is that the market was deeply oversold. So we had McClellan oscillator at two standard deviation below the average, sorry. So the market was really stretched to the downside. And what happens when we stretch the band? Then it reacts and it bounces. So right now I'm treating this strength, this bounce, as a counter trend rally within a downtrend, right? And that's exactly when I don't want to trade those short-term oversold conditions. I want to trade them and be aggressive in them when we are in an uptrend, when we are above a rising 21 DMA structure and the market gets weak and then flush and we get those spikes oversold spikes into an uptrend, that's the time to load up and be aggressive and catch those leaders into their structures. But now the trend is down. It's confirmed down. The structure is making lower highs and lower lows. There's no doubt about it. Um, so yeah, McClellan summation is getting oversold as well. We might approach some turning points. So that's why I want to keep an open mind. I'm not putting myself in a mindset where oh, we'll have a multiple week and months correction, or we're entering a bear market. That's not what my defensive stance is about. My defensive state is about the trend is down. I don't try to anticipate or guess what will happen from here. I'm welcoming strength right now. Once again, when we have strength, we're entering a phase where we observe. So we might have a low that has been made on last Thursday, and now we rally into a declining structure. And what will it do when we retest? Again, do we reject, form tight action, form a high low, reclaim, and then we can engage in the market? Or we retest, we reject, we flag, or we break down and roll over and form a new lower low, in which case we reconfirm the downtrend once again, and we're just there waiting for the market to get better. So right now there's nothing to do. Just wait and observe that the market gets into the overhead structure, and then we'll observe what it does, what the market, how the market reacts, and what form nice pivot and tight action so we can execute if the market start to reclaim those structure and we see breadth finally turning up. And if it turns up, we'll be pretty oversold. So we need to flip our switch when it will be time, and not be stuck into our correction or bear market mindset. We'll, we'll need to execute that because we'll be in a good spot breadth wise to potentially have a sustained rally. So that will be important to not lock ourselves into a defensive. And you'll see me when I see the action that I want on QQQE, when I see the action that I want on the summation, when I see the action that I want in the liquid leaders, in the VIX, in the credit spreads, in Bitcoin, when everything is aligned, you'll see Alex being aggressive as usual because I will see what I want to see in the market. And that's the same thing every time. And until that you see enough of these market cycles and enough of what's needed in the price action, in the internals, in the risk assets, uh, then you don't really know when to engage, when to be aggressive. So build your playbook of what you want to see in the market, in the internals, in the risk asset, in the liquid leaders, in breadth. And then when you know and you see that, then it's clear. You don't have any hesitations, and you just execute. And that's what needed over time to be an efficient and performant trader. Not asking yourself and trying to decipher and understand what the market is telling you. You don't need opinions, you need signals from price action, breadth, internals, liquid leaders, and risk assets. All right, I hope it's clear. Um, all right, and what I wanted to do as well this morning is review a bit of the kind of liquid leaders. I just review, and that's the same story on NQ, right? So since April, look what we've done. Every time that we pull back and we broke down below the 21 DMA structure, every time that low held, right? So same happened in August, but we formed a double bottom that low held, and we rallied further. Same thing in October, early October. We had that sharp breakdown, but we formed a higher low, and then we rallied further, right? And right now, that's why I'm not in a hurry to engage back, because I recognize the structure. We broke down, and we tried to do the same type of structure that we had in October and August, right? We tried to hold that low and to push further. And that's why I was getting a bit more in observation, and we had those liquid leaders setting up. But internals were not looking good. Bitcoin was not looking good. And you know what happened last Thursdays as well. But right now we had that breakdown of structure right here. So automatically we go into a deeper pullback scenario. And until that structure is reclaimed, that longer pullback scenario remains. That structure, that base and range structure, is now a potential resistance, and any rally into it is suspicious. You don't hack, you don't engage, you don't buy into that structure. That's potential resistance, unless we reclaim, then we form a higher low, and that low remains, and we get a higher low on the right side. And then we're starting to observe, and we have a constructive high low structure and potentially high being made. And now out of a sudden that downtrend structure is flipped up to a uptrend structure. So that will be a very different picture and very different scenario to engage and put ourselves into an observation and execution mindset. But again, that's not what we have right now. All right. And you remember last week, uh, I kind of started to build that focus list and stock list of liquid leaders that were pulling back into their 21 DMA structure, or trading around their 21 DMA structure. And that was in that time span, because I wanted to get ready in case we reclaim the 21 DMA structure. So let's just review quickly. And all those, and I had about 10 names in the focus that were still trading above the 21 DMA structure. And right now, look what's trading at or above the 21 DMA structure. There's more in the liquid leader scan, but from those that were leading last week, look what happened. The only names that are still trading in the 21 DMA structure are COHR and Caterpillar. So will they hold? They're kind of the two remaining names. Look what happened to the others. Micron broke down, and now we're trading below a declining 21 DMA structure. So if we rally and retest, that's a bit what happened with the Bloom Energy type of names. We're like trading 1 or 2 weeks behind in terms of weakness. So that's kind of the Micron action that happened on BE 1 week ago, right? We had that breakdown, that initial strength and oversold bounce, and we retested the declining structure, and then weakness, bear flag, and we broke down. So same thing early happening in Micron. So that's why they say topping is a process, right? You have the first initial names that are breaking down and starting their downtrend structure. And then you get the strongest names that are lagging in weakness about 1 or 2 weeks. And that's why topping is a process. they're not flushing them all together. You have those waves of weakness that bring down those names one by one, group by group, as the market downtrend continues. Same thing with WDC. Memory plays as well. CN breakdown might retest the declining structure. STX, CLS kind of bear flag into declining structure, made a new low. AVGO really starting to look like stage 4 high volatility base, to be honest. CRDO new low as well. SoFi below that base structure. VRT new low. TER new low. DDOG very weak action. AMD broke down retest of declining 21 DMA structure, new low. AMAT very volatile both ways, not interested anymore. Palantir new low, rejection of the 21 DMA structure, broke the range structure, new low. ENTC rejection of the daily structure, new low. APH rejection of the declining 21 DMA structure, new low. And BE rejection of the daily structure, new low. All right, so you get the picture. I just wanted to review kind of the names that we were tracking for relative strength, and just to show how those names got rejected into their declining 21 DMA structure, into their prior range structure as well, and they almost made a new low late last week. So there's a lot of damage to recover from, to heal, and that's why I'm not feeling the urge to engage anyway. Just looking at the liquid leaders, but obviously I have my market rules from QQQE to engage anyway. All right, so let's take a question. Udo Trading is asking, as example of NQ in October, you showed the higher low structure. Would it be valid before the reclaim of the 21 DMA structure or just then? My guess is you will reply. You already know what I will reply. I love it. In that case, is it the time for beginning of anticipation trade? Okay, all right. So that was very different. August, that was this one. Yeah, I was still engaging in August, right? Because what? We were building higher lows. And yes, I was looking to re-engage because that's the type of oversold conditions and pullback structure that I like to be aggressive in an uptrend. And yes, I played that, of course. And the other thing was the liquid leaders, and the pullback scan was filled with liquid leaders acting constructively and building entries around their 21 DMA structure. And last week, I was kind of ready to see the same scenario, right? On the right side, I was ready to see that build up. The right side, there was some liquid leaders starting to set up from that list, right? So I was ready to wait, observe, and engage again. Oh, in October, this one. Yeah, it was the same thing. And that's why I engage as well, because we had that breakdown and higher low. So we had a valid higher low structure. Despite that breakdown, what happened is we were holding that 21 DMA structure, and it was still rising, that 21 DMA structure as well. and we had that break of range, reclaim of structure, and we had the back test as well, so another higher low. So there was constructive action on NQ for sure. That's the type of action that I want to see. Breakdown, then we tighten up or all the 21 DMA structure and build those higher lows on the right side. And as you build those higher lows on the right side, then uh, you have names in the pullback scans, and you execute those entries, and you have feedback and you have traction, and they hit their 2 or 3 hour targets, and you get traction. You get good feedback from your trades because the market is trending up. And even if you have weakness, the trend is up. So you execute and you focus on your names, on the liquid leaders on your portfolio, and the market is just a good in a good state in an uptrend. Um, and McClellan summation was trying to flip as well, so that's the second confirmation that you get. Uh, but right now everything screams downtrend. And again, we're not making higher lows. We're making lower lows as we trend below that declining 21 DMA structure. That's a very, very, very different picture. All right? I hope it's clear, guys. That's very important to recognize structure in the market in your names. Higher high, lower, higher high and higher lows in an uptrend, and then when it starts to shift, it gives you the clues to assess that we are in a downtrend. When we start to make lower highs and lower lows, that's what a downtrend is. All right, so game plan for me again today is to sit out. If we continue to see strength today, then just like last week, I'll start to put myself in an observation mode, observation mindset, and start to look again how we react to that rejection. And once we run into a declining structure, that's when you start to get good information. Until then, we're just in a downtrend, and what we see right now is just a counter trend oversold rally. That's it. All right. So any more questions, guy? Thanks, Pat. You too. Have a good day. So Vic is asking, on the previous high lows when the 21 was rising and you were engaging, were you also using MCSI and MCO to confirm engagement? Yes, I did, but price is first, right? Always. Breadth is kind of secondary, kind of a confirmation. And remember, guys, I still had exposure in cores and runners. So I had my core exposure. That's very different when we are in a confirmed rally and you already have exposure. Then you can test the market even if you don't have that McClellan summation uptrend. And if you have traction, then you can build into that, and just trust the traction and the feedback that you get from your course and your new exposure as well. Um, and yeah, it was still engaging, mainly because of price, and we had those two type of hookup and small uptrend as well. That's the two uptrend that you see right here on the McClellan summation. That's what those two mini rally in the market after those pullback were, right? So we had that small rally right here. So we traded with the win, and we had that second uptrend in the McClellan summation as well. So yeah, we had that confirmation, but we were trading in a McClellan summation uptrend as well. Amazing, Davin. Yeah, enjoy time away from the market, and uh, we were pretty much on from April. So that time of the market is a good thing. Take that time to recharge or improve your trading system. That's a great time to just switch off and work on your system, on your rules, away from the market. That's the time that you need to do that. Review your trades, educate yourself, and just trying to improve for the next market opportunity. Because when the market is good, is there, you want to focus on your trading. It's not time to review your system. All in all, it's time to play. It's time to execute. And I remember I was playing golf at a good level when I was a kid, and my coaches were always telling me the same thing. There's a time to work on your swing and to practice. That's when you're in the driving range. When you get on the course, then it's time to execute. You don't think about your swing. You don't think about what you want to change. It's time to rely on your instinct, on what you learn in the driving range. It's now reflexes, and you trust them and you swing. That's the same thing for trading. When the market is in a confirmed rally, and you're executing your hedge, you focus on that. When the trend is done, when you're back in cash and waiting for the next market opportunity, then it's time to study, to go back into your trading, find the mistakes, find what you did good, and do more of those. And that's how you will grow and keep your focus on executing during the market is good as well. Yes, so Tuba is asking, could you consider new as weakness into the... Yes, it's in the scan. I don't build focus lists, right? Because the market is not allowing me. And I don't even look at the names. So you will always get temptation. And that's the thing. Those, right? Last week, all those names were in the scan. And like I said, a topping process, a topping of the market or a longer pullback is a process. They will bring down the leaders one by one, group by group. Last week, it was those. Those were looking really nice in their 21 DMA structure. In the market, weakness and selling pressure was getting less and less. And that's why they were trying to getting tight into their 21 DMA structure. And when the selling resumes, when the market gets into the declining 21-day structure and reject, then you get those leg down into those names that were setting up. And that's why I don't look at those names when I get the QQQE, for example, my market filter in a downtrend. I look at this scan when we get constructive action, right? Sometimes it works, sometimes it fails. But I don't care. That's always the same time that I look at this scan, right? Because when we get into a rising 21-day structure in the market, when we reclaim that structure after a pullback, that's when I want to focus into those names, because the market is trying to flip to an uptrend, and then those names I want to engage. But right now we have CAT and NU. So you were asking about NU. So yeah, it's there. It's potentially a nice base, but it's holding the 21-day structure, and the market is uh, having that counter trend oversold rally. What will happen to those names if we get into structure, overhead structure, and we reject and reconfirm the downtrend? Then those setups have high probabilities of failing. That's why for me in my system, that's always market first, because even if in a downtrend, you will always get those setups. There's always setups, because the crazy strong names that were super extended are taking their time to pull back to the 21-day structure. And that's why topping is a process. So you have COHR, XP, Expedia, and Rivian. So those are the setups. But again, I'm not even looking at them, simply because the market is not allowing me right now. All right, guys. So that was a good session. I hope you enjoyed. And I wish everyone a very good day, a very good week as well. And let's hope the market is trying to firm up, build constructive action on the right side, and we'll be able to execute this week. But again, we're not in a hurry. We wait what we want to see, and then and only then we'll execute. All right. So take care, everyone. Have a good day and have a good week. Cheers. Bye bye.